What are the advantages of a letter of credit? 1. Security for the exporter and the importer. The advantage to the importer is that he pays after the shipment has come out. As long as both parties do business honestly, buyers will not take much risk, because at least the exporter had actually shipped the goods and received them on their bill of lading, and the quantity date and are consistent with the sales contract. 2. Safely growing the business worldwide. One of the primary advantages of using a letter of credit is its ability to foster international business growth securely. Providing a reliable payment mechanism insists confidence in both parties, encouraging them to explore new markets without fearing payment uncertainties. Enhancing cash flow management. The structured nature of letter of credit ensures that payments are made promptly upon fulfilling conditions. This punctuality enhances cash flow management for buyers and sellers, allowing them to plan and allocate resources more effectively. 4. No credit risk for the exporter. Unlike an open account transactions, where the seller may face credit risk, a letter of credit eliminates this concern. The bank's commitment to payment provides sellers a risk-free payment method, making it an attractive option for businesses involved in high-value or long-distance transactions. Alternatives to a letter of credit. 1. A standby letter of credit. SPLCs, or a standby letter of credit, often used as fallback or standby options in case that a primary payment method fails. SPLCs act as a backup guarantee and can be simpler to arrange. 2. Bank guarantee. The bank promises to pay the exporter or seller if the importer or buyer fails to fulfill the terms. Bank guarantees are often less document-intensive than the documented letters of credit. What is the difference between a bank guarantee and a letter of credit? Bank guarantees and letters of credit, LCs, are used in trade to carry out international transactions. LCs are frequently used in international transactions compared with bank guarantees. However, bank guarantees are often used in real estate and infrastructure development to mitigate credit risks. When comparing the two instruments, the market for bank guarantees is much bigger than that for LCs. What is the difference between a standby letter of credit, or SPLC, and letter of credit? A standby letter of credit is different from letter of credit. An SPLC is paid when called on after conditions have not been fulfilled. However, a letter of credit is a guarantee of payment when certain specifications are met and documents received from the selling party. Letters of credit promote trust in a transaction due to the nature of international dealings, distance, knowledge of another party, and legal differences.